What's up, guys? Hope everyone is doing well. On today's video I'll be talking about breaker blocks. We've got your bullish and bearish breaker blocks. So basically this diagram here is just explaining what we expect in price and how we want price to move for us to identify our breaker blocks. So to get into it, we're going to use a bearish example and a bullish example, right? So for example, we'll have price creating a high, a low, and then a higher high. We need to see price create this higher high. From this higher high, we then need to see price drive all the way down, right? Breaking the previous low, creating a lower low, right? Or a new low, right? From there, we have a break of structure, right? And then from there, we're going to wait for price to come all the way back into our bearish breaker block. So what makes our bearish breaker block? It's the down candles on this high, between this high and low, that created the higher high, right? So it's the down candles within this range that created the higher high, right? And then from there, once price retraces back into that zone, right, we will then find our entry point to continue price all the way down. Then for our bullish breaker block, we want to see price creating a downtrend, creating a low, lower high, and then a new low, right? New low. From there, what we want to see is price extending all the way up, creating a high, new high, which is relatively higher to this high on the left side, breaking structure, right? What will make our zone, our bullish breaker zone, will be the up candles or bullish candles within the range between the low and the lower high, which created the new lower low, right? From there, we wait for price to push up, creating a new high, and retrace back into our bullish breaker. Then from there, we enter within that zone. Obviously, we have to wait for confirmation, and then we target the highs, right? Target the highs. Target the highs of this relative high here. So this will be TP2 and then TP3, right? Of TP1 will usually be the midpoint of this range. So for about, let's say if your stop loss is 20 pips, you target 20 pips as TP1, TP2 40 pips, and 60 pips, and they're off. So let's discuss now what we are looking for in the candles that create our bullish and bearish breaker blocks, right? What are we looking for? So for example, within our bearish breaker blocks, we are looking for a candle such as this one, right? How do we mark up our candle, right? So when the candle is full like this one, we'll mark from the body's high to the low and extend that, right? All the way. And what we are usually looking for is for price when it comes back to hit the 50% level and then continue, right? When it comes to candles that have wicks such as this, we take the body, the low of the body, to the low of the wick, and then we extend it, right? Same scenario, we look for price to come down. We look for price to come down, hit the 50% level of this wick between the low and the low of the wick, and then from there a continuation to the downside. I am going to take this to the charts and show you a better example, but to carry on, for a bullish breaker, we are looking at the same thing, the entire body of the candle, right? And we are basically looking for price to come into the zone and then continue up, right? for the wick of this one, we're gonna look at the high of the body this time, right? Not the low, the high of the body this time, and the highest wick. We are waiting for price to come back into the zone, hit the 50% and continue up, right? So this is basically what we are looking for when we are looking for our bearish and bullish breaker blocks. Boom. All right, let me just fix that so you can take a screenshot. And then a continuation to the downside. From here, boom. Let's mark that with a orange. Clone that. And then vice versa with a bullish, right? Breaker block. So just to recap what I just said now in the previous video. Just to recap on everything. A bearish breaker block is when price creates a high, a low, and then a higher high. From that relative high, we break structure, creating a new low, right? Our bearish breaker block will be the down candles between the range of the previous high, or the high and the low that created the new high, higher high, right? A bullish breaker zone will be a low created by a lower low and then a new lower low, right? Our bullish breaker block will be the up candles or bullish candles between the low and lower high that created the new lower low, right? We wait for price to push up, breaking structure, retrace, come into our bullish breaker zone, right, for our bullish diagram, and then we take price all the way up. So now I will be going into the live charts and showing you a bullish and breaker scenario. So this will be an example of a bearish breaker block, right? So let's get into it, guys. So to mark up our charts, we'll have a uptrend, right? Price will be creating an uptrend. We have a high, a low, a higher high, right? Once we see price creating this higher high, we want to then see price break the previous low, right? Which we do see over here, right? So we have a break of structure here. Boom. So now the question is, where is our bearish breaker block? So as I said in the previous diagram, our high, our low, our high here, we look for a bullish candle between this high and low within this range, right? That will give us our bullish breaker block. So as you can see, we've got a pin bar here, right? And then we've got a relative bullish candle, but the bullish candle that we're looking at that's most likely to play out is this bullish candle. The reason being is because it broke structure to the left, creating this new higher high. So we are going to take the entire body of this candle and drag it all the way to the right side for our bearish breaker block. So we put that in, drag it all the way, and then from there our entry point will be once price gets into the zone, creating our entry, right? Creating our entry point. Boom. We're going to target previous lows, right, where there's liquidity. And as you can see here, we've got a relative zone here, or a zone that has sell stops. So usually what you'll see is that when people are trading price in a bullish momentum, or trading a bullish trend, they tend to put their stop losses below these lows over here. So we always target the lows, right? So that we can benefit and take out stops. So that's basically a example of a bearish breaker block, right? Bearish breaker block example. Okay, for our stop loss and take profit, we usually put our stop loss above the high, right, of the candle within the bearish breaker block. Reason being is because, as you can see, if I remove this, we've got a zone here of imbalance, which is creating our fair value gap, right? So to play it safe, if price wants to continue higher, it will just come pierce up into our fair value gap, mitigate the imbalance, and then from there continue down. So stop loss will be off the high of the wick or the body, whichever suits you depending on your stop loss. And then from there we just target the lows, right? All the lows here. So that's the example of a bearish breaker block. So we've got a bullish breaker block. Alright, so in this video I'll be showing a bullish breaker block on this diagram over here. So basically, to mock up our chart, you can clearly see that price is bearish, right? We've got a high, a low, right? A low, lower high, lower low, lower high, lower low on this wick, right? So we can clearly see that we break structure, boom, and we create a very impulsive move that sweeps all the liquidity within this trend line, right? Swept. So basically, where do we find our bullish breaker block to continue our buy side model? So we obviously are going to look between this low here, which is our lower low, and our high over here, right? Our high over here. And as we explained in the previous diagram, we're looking for a bullish candle, right, within this range, right, that can allow us to find our bullish breaker block. So we're going to look at this candle over here, right? The reason being why I'm choosing this candle is because it's the reason or the cause of the break of structure to the upside. So it's the most recent candle within the range that caused the momentum and push to the upside. And to mark up our bullish breaker zone, since we see that the candle has a small body with a large wick, we are going to take the high of the candle body and the high of the wick, drag it all the way to the right, and then from there we'll find our entry point with our stop loss just below the previous candle's low or the bullish breaker block candle, and target the highs to the right side. Target the highs to the right. Boom. This will be our entry point over here. This will be our entry. And then obviously we can clearly see that price continues all the way up, guys. So this is very, very, very important, guys. It's very simple. All we're waiting for is to find out where's price heading, right? See, it's creating lower lows, lower highs. Then we have a sudden impulse move to the upside, expansion. We then mark up our previous high and low, our break of structure point, boom. We look for the candle that causes the break of structure, which is clearly this one. Since the candle body is small, we take the high of the candle and the high of the wick, drag it all the way to the right, wait for price to retrace into our bullish breaker block, and then go in for a long position with our stops between these lows and targeting previous highs. So yeah, bullish breaker, buy side model, guys, and entry points. I hope you enjoyed this video. Be tuned because we are going to drop a few more videos in the coming week. Thank you, guys.